What's up, tribe? It's Coach Titus, and I just want to give praise to God that you're here and you're joining me on this journey. It's been miraculous, and I am more than overjoyed to be sharing this with you. Before we get started, I need to say the disclaimer. I'm sharing this for informational purposes only. It is my own proprietary system, a result of my own research, and it's a strategy that I use in my own real account. While it's a principle based strategy, the strategy is subject to change. By sharing my trading activities, it's not a solicitation from me to buy or sell securities for others. Trading does involve risk with possible loss of principal. Sharing my live trading sessions should not be construed as investment advice. So, with that being said, we're going to jump right into the smart money roadmap. I've had to make an adjustment because the market is closed at the time of this recording. We're using the ES futures chart, the ES future S&P 500. I use that on a daily basis because it is the leader, the SPX, which is my primary instrument, which is what you will be witnessing me trade live starting tomorrow, Tuesday. However, the market's closed today, and I can't use it as an illustration because the VWAP, which is the white line on your screen, does not appear on the SPX unless it is actual trading hours. Okay, so we're going to use the ES right now, and it will be more than sufficient to illustrate the smart money roadmap, which I generated from taking a screenshot of the ES, put it in Chat GPT, and I asked it the specifics, the market structure. If you watch the previous video, you will hear those requests. I'll also do a copy paste. So all you have to do is copy paste the language, and it will produce the smart money roadmap that I follow on a day-to-day basis. I want to make mention that I do update it during the regular trading hours. Specifically, if I see that the roadmap is changed. So the institutions don't always stick to it play by play. And if I see that there is any type of change in their strategy and psychology, I pivot and make the change also. So, with that being said, the smart money roadmap takes into consideration the current price, the VWAP position. So, our VWAP is positioned at 68.61. Okay, so that is going to be a magnetic line. That is the line we use to determine the bias of the market structure. Is it bearish or is it bullish? So as you can see, the candles are forming underneath the VWAP line, underneath this white line right here. That means we are in a bearish trend. Okay, so it's underneath the VWAP, we're bearish. Okay, so what that means is smart money psychology is targeting the lower liquidity targets. Okay, so the lower liquidity targets, the downside, based on the structure of the market, is going to be at 68.41. You see, that's at the low. Okay, so there is a liquidity pocket right there. You're going to see price go there and do what's called a sweep. So they're going to um, take orders there. So that is going to be their supply line. Okay, so they're going to go there They're gonna take liquidity, and you may see it go even further down to the next target, which is gonna be 68.20. Okay, so 68.20 is another lower liquidity target. A price could go there as well. So that's all relative in how we position our trades. Okay, so as we farm our iron condors, that is going to be the put side of things. So in relative uh, strike placement, we're looking at placing our strikes at or below 68.20 as the secondary downside target, 68.20. Now, I've been watching this particular instrument for quite a while, and I would actually go to the third target for my strike placement. Um, which would obviously be below the 68.20 level. But for all intents and purposes, after it hits the lower liquidity, the price is subject to go back towards the VWAP, which acts as a magnet. Okay, so at 68, 61, we could expect price to head back in that direction, provided it doesn't stall out based on the resistance levels. So as price is descending towards the 68.41, what you will have to take into consideration is that the support level will then turn into a resistance level, and you may see price hit here and stall out. So the important part here is strike placement based on our VWAP line. So our call side would be placed above the VWAP line. A safe call placement would be, around this level right here. Well, 68.85 is the high. So you would take that in consideration as you are placing your calls. With the Iron Condor, mind you, you want a range. So you want the range. We've got a pretty big range here. Well, it's not that big actually. It's 68.85 to 68.41. That is pretty decent range. But as I recall, we had a lower liquidity target at the 68.20 level. And so we would consider making our strikes, the calls between 68.97 and 68.20. That would be, a relatively safe trade to make. I'm not sure what the premiums on that would be or the credit at this point in time, because that's not the purpose of this video. The video is just to show you how the VWAP line works and how I'll be utilizing it tomorrow. Now, I'm going to take your attention to where price started bouncing off of the VWAP line. Now, this is really important because this is how we avoid getting tricked, duped, played. Okay, we always want to be trading in the direction of smart money. Okay, so I'm going to take your attention to right here where price was consolidating. Smart money was going sideways here, and then it broke. Okay, you can see this large red candle right here, which started this downward trend. So that's essentially what we are waiting for as we are watching and waiting to place our trades. We're waiting for confirmation. So this candle right here, this bearish engulfing candle, this big red one, is our confirmation that the smart money institutions have committed to a downward bearish trend as they are targeting lower liquidity. Okay, so they are targeting lower liquidity here. Looks like they've completed their first downside sweep, the target of 68.41. And now price, as I said, is magnetically going back to the VWAP. The VWAP is value average weighted price. Okay, value weighted average price, sorry. And that is the institutional line for buying and selling at a profit. Okay, so mind you, their objective is to make profits for their clients. So we always want to be on their side. Okay, so that's the psychology is for us to develop into institutional traders, professional traders. So with that being said, we're now going to see another test of the VWAP line. I want to go over here next and show you when the line is accepted. So this is a good illustration of when the VWAP line is accepted. You can see this little green candle is the first candle to appear above it. Okay, we don't want to make our entry at that point. We want confirmation. So this bullish green candle is the confirming candle. Okay, that smart money is committing to a bullish continuum. Okay, so with that being said, the target is 68.85, but that's not where we want to enter the trade. Okay, because we are still subject to get faked out, duped, and played because the trade it's not a solid confirmation. I'll put it this way, until we see the retest right here. So this is the retest of the VWAP, whether or not price is going to be accepted above the VWAP line. This candle right here is a bullish engulfing candle, and then you see the hammer right here or the pin bar. That is our confirmation to enter the trade. They have now committed to going to 68.85 and doing a liquidity sweep there. Okay, so price hit there. They made the sweep, and as you can see, now we're in a downward trend. We're consolidating along the VWAP again, and as we saw, it then rejected the VWAP and headed towards the lower liquidity sweep. Okay, so that is how we use the VWAP. That is a really good illustration, if I do say so myself, of the acceptance, rejection, retest, and liquidity targets. All right. I think that puts us in a very good place to watch the live trades tomorrow. All right. Peace out.